Hey, what's up fam? Welcome to this video. It's your boy Sammy. In today's video I'm going to be talking about when to place an entry in a trade and exit using price action. But if you're yet to subscribe to this channel, don't forget to hit the subscription below and also like this video or leave a comment for us to give attention to. Now, and also if you're here to watch price action, you can quickly go down to the description below. I'm going to be leaving the description below. You can just click on that link and get access to it. Now, placing a trade is very vital because your entries in a trade can determine your risk level. Take for an example, you place a trade here and you thought maybe you're going to get in on a buy here, and your risk is going to be somewhere here because why? You entered wrongly thinking because this is actually a buy. Let's say here you entered here to buy up, so you're going to be risking too much because why? You don't want the market to quickly stop you out, and that will be wrong. So the best advice is always wait for the market to always come to you before getting involved in the trade. For example, and also I'm talking about how to place a trade with a good risk management strategy and with a good entry levels. First, you have to ask yourself these questions. It's the first question you want to ask yourself is what's the market structure? Market structure talks about a market in an uptrend or a downtrend or a market that is moving in the sideways direction. Now, if we take a look at USD, let's go to the 4 hours. USD Swiss francs, this market is actually bullish because why? The trend line has actually been broken here. See, the trend line has actually been broken, and what did we get? We got let me pull this out. Okay, we got a breakout that led to a pullback to grab out liquidity from this zone here. The market actually grabbed liquidity from here, from this zone here. Sorry. Yeah, market grabbed out liquidity from all the zone here. This whole zone, liquidity was grabbed out. So what we want to be doing is, we saw the market came back, and there was something so important about this. The market actually got to this trend line, broke it, and came back and respected that same trend line and went back up. Now, the next thing, like I said, the first thing you want to know that this market is bullish. The market is bullish, so you want to look for opportunities to buy. So the next thing we're going to be doing is look for the market in an area of value. Now, an area of value is talking about the market coming back to this trend line. And what did we see? What the market did? It came back to this trend line here. It came back to this trend line. Okay, so market came back to this trend line here. Now you're done for the 4 hours. So what you want to do is go back to the 30 minutes. 30 minutes, let's look for opportunity there to look for entries. Now, we don't just get into the 30 minutes and just look for opportunities to start buying. What we want to do is get a confirmation. And what's that confirmation? That confirmation is actually price changing structure, which is market structure change. Now, market structure change can actually be a double bottom or a triple bottom or a head and a shoulder. It shows that the market is about to move in an opposite direction. Now, what did we see happen here? Something happened here, and what happened was that we got a double bottom here. We got a double bottom here, which is an indication that this market wants to go in an opposite direction. Because why? If we draw this trend line here, we'll find out that this trend line in this bearish market in the 30 minutes has actually been broken. So we are expecting the market to actually move in an opposite direction. Okay, sorry. Okay, so as you can see, 30 minutes trend line actually be what? Broken. Let me take this out so we can see the chart clearly. It actually be what? Be broken. Now we've gotten our market structure change indicator. Now that takes us to the three strategies that occurs in market entries. Now the three vital strategies that I'm going to be showing us in this video today. Three strategies you can actually look for any of them to get involved in the chart. One, it's the aggressive entry. Now when market gave us a double bottom, we saw that price came here and gave us something like this. Let me take this out. This was actually an entry. This was an entry for us. Now why do I call this an entry? This is an aggressive entry. Now an aggressive entry talks about when price actually comes back to this zone. It gives us a double bottom. The second entry here, the first entry here, it's the aggressive entry where price gives us this. And what did we see this? We saw this as a preceding pattern where price covered over above 50% of this bearish candle that took market down to this downside. So this is our entry here. This is our entry where the trend line is actually so this is our first entry to take price or to the upside. It's called an aggressive entry. Now the second one entry is the pullback, and otherwise known as what? The neckline. Now if you notice, price actually got to this zone and pulled back to this neckline. Yeah, good. See, I call this an entry, the neckline. Why I draw this all down here? If you look closely, you will see a double bottom here, a double, yes, double kind of a double top here. If you draw this all the way up, let me take this one out. Okay, so as you can see, price came back to this neckline and gave us entry. Now what was the entry we got here? We got a reversal candlestick, bullish the first time, broke the structure, came back and gave us another entry. Now that is the neckline entry strategy. And now the third one is the breakout strategy. Now this is where market actually breaks out of the zone. Good. As you can see, we actually got another entry here, which was a reversal entry for the bullish candle. A reversal entry for the bullish candle to take price to the upside. To take price to the upside. Let me point this out so it will be clearer. Okay, so this was the entry. This was the entry for us to take price. This is called a breakout entry strategy. So I've just shown us the three entry. The first one is aggressive entry. The second one, otherwise known as the pullback or the neckline entry strategy, and the third one here, it's the breakout strategy. Now for folks that are just beginners, they love to enter into the breakout strategy, whichever one, but you have to take note of these three vital points that I just said earlier. The first one, you have to make sure that you understood that the market structure is actually bullish, and the second one is make sure the market come to an area of value, and the third one here is you want to make sure that you see a market structure change in the 30 minutes. You do analysis in the higher time frame like the 4 hours or the daily time frame, but I advise to use the 4 hours to get a clearer picture of what the market is doing. So you go to the 4 hours to get your analysis, and you come back to the 30 minutes to look for opportunities. Now if you're trading the 30 minutes, I always say wait for the market to come to you. Now I've always noticed during the course of my trading years of trading, now I've come to understand that the market will always come to you. Now what do I mean by that? You might get an aggressive entry in the um, in the 15 minutes, and you might not get it in the 30 minutes. But what you'll be getting is the neckline trading strategy, where the market comes back to the neckline. Or if you don't get that in the 30 minutes, you might be getting the breakout strategy. So you always wait for the market to come to you. There will always be an opportunity for you to trade. Now let me show you something that is still happening here in this market in the 4 hours. Okay, now let's say we mix this, we lost this opportunity. Now what do we want to do? We want to see something like this. Since we know the market is now bullish, we want to draw our trend line here all the way up. Now what are we trying to do? We're trying to make sure that we see an opportunity again for market coming to touch this zone. Now if we go down to the 30 minutes, we should understand already that the 4 hours is an area of value. Now I'm going to be showing you something here, something that I drew. Now the first thing that I got to understand here was that I noticed that the trend line was broken. It is broken here. So I'm likely to see like something like a market structure change for me. So as you can see here, also structure was broken here. There's been a breakout structure here. There's been a breakout structure here. So what I'm expecting now is for this market to actually come here and give me a market structure change indicator. And also the three things are likely going to be happening here. One is the aggressive entry, and after which we're expecting something like a pullback and get a trend line. After the aggressive entry, we're expecting something like a pullback to take us all the way up. And don't forget, we have something like this. Sorry, let me take it a little bit up. So we have something like this. I'm seeing something here, something here. There's gonna be something like a breakout strategy. There's gonna be something like a breakout strategy here. Breakout strategy. Forgive my trend line. That's what I'm expecting to see here in this market. So I'm just expecting to see something like this, though there's still going to be another breakout because there's something here also, but I'm not be able to draw all of them all because I need to show you something else about this. Okay, so I'm expecting something like this also, and of course a pullback here and another strategy to right price back to the upside. So guys, this is how we do the entry strategy in the bullish market condition. So let's go to odd USD. Let me see if I can show us the same strategy occurring like this in the bearish market condition also. odd USD have been crazy lately, so still patiently waiting for it. Let's go to 4 hours. Let's see what's happening here. Okay, let me explain just from this chart here. So take this down a bit. Okay, let's explain from this and see what happened. Take this to this point. Let's see what happened. Now, market is in an area of value, like you can see, lower high, the market pull back. Let's go to the 30 minutes since our 4 hours. We know that the market structure is bearish and the market is actually in an area of value. So we're going to go into the 30 minutes. Let's see what's happening. Okay, so this is all we got. I'm going to show you what happened here. So market in an area of value. Let's draw a trend line. I always do that because it gives me a clearer picture to know what's happening. Okay, so I don't like using this. Please take note of this. When drawing a trend line, you have to be very sure of one thing, and that one thing is you want to make sure the market is touching two to three swing points where the market came to that trend line. So let me take this out. Yeah, I'm fine like this because I saw market touching 3 points. So now if you look closely, you're going to see that we have a double top here. No, not just a double top. Yeah, a double top. You're fine. So that's a market structure change indicator that shows that the market wants to go up. Take this out. So this is an aggressive entry for us. This right here is an aggressive entry for us. Sorry. So that's our first aggressive entry, like you can see. Yeah, this is an aggressive entry. And the second one was when market came to the neckline. This is the neckline. So if we look closely, we saw this happen. Price came back to the neckline. We saw this happen. So just point it out. So the stock market came back to this neckline. So as you can see, and this is a breakout of this whole zone. Is a breakout, and this is our entry trigger here. Dark cloud cover to take price to the downside, and as you can see, we ride price all the way to the downside.